Good day, inderesTV viewers and listeners. Nordea published its first quarter results today, and I have the pleasure to interview Nordea Group CFO Ian Smith.
So.
Ian, how do you do?
Hi, Henry. How are you doing? I'm well.
Very good, thank you. Even though the times are quite tough, but if we focus on Nordea, how was the first quarter from your view?
Yeah, I agree with you. It's a strange world at the moment, but in the midst of all of that, Nordea had a very strong first quarter. Return on equity of 15.7%, and I think strong on most of the income lines, and good solid performance. One of the things that we see though is that we're still waiting for loan growth to restart. Activity levels were a little bit slower, and I think that relates to the uncertainty that we've seen in the first quarter. And what it means is that customers want to keep their financial flexibility. So we saw deposits increase strongly as customers keep their money in the bank. And we saw also some good savings and investment, and companies also sitting on their hands a little bit. So lower activity levels, but overall a really good solid result from Nordea.
As usual, loan losses were almost non-existent. I think 1 basis point, which must be one of the lowest numbers in Nordea's history, if not the lowest. What do you think, looking ahead, is this the low and now the only way is up?
I think that our loan losses in Q1 were unusually low. So, at 1 basis point, when we say that we think normal levels should be around 10 basis points. So I think, if we look at the last few quarters, we've been around 6 or 7 basis points or something like that. So it is an unusually low quarter. But I still believe that, first of all, our customers are in good shape. The portfolio is very robust and resilient. So while we may see higher levels than we've seen in this first quarter, we don't expect them to go up extraordinarily.
And I think you mentioned in the report that it was few individual corporate customers, but for example, the retail side, there were no losses almost at all.
Yeah, that's right. So on the retail side, we're principally driven by when customers miss payments and other things that increases loan loss provisions, but we're not seeing that.
I think many investors, they look at your first quarter, but also many people are thinking about what happened on so-called Liberation Day, 2nd April, and what will happen in the future with the tariff war. Have you seen how has the tariff war impacted your customers? Are they more uncertain, or what have they done I know it's still early days, but what have you seen thus far?
Yeah, so the first response, if we think about customers on the retail side, we probably saw double the usual number of calls into our contact centers and into our advisors, and with people focused on, okay, what's this going to do for my investment portfolio? What should I be doing? Should I sell? Should I wait? Those kinds of things. So people looking for advice, and we saw a little bit of selling in the early days, but then we've also seen some buying activity then, and I think it's relatively balanced actually. So I think retail customers are staying calm, but it's a very difficult situation for them. And generally speaking, the advice is not to do anything, hasty. And then on the corporate side, when we think of what the businesses in our region have had to deal with in the last 4 or 5 years since I've been in Nordea, we had the pandemic, we had the war against Ukraine, and everything that came from that. We've had inflation. We've had, a interest rate environment that we hadn't seen for 10 or 12 years. So in some of our customers are saying, okay, so here's another thing to deal with. But we know how to navigate uncertainty. So I would say, again, calm on the corporate customer side. But clearly there's a lot of thinking and a lot of strategic work to be done to decide how to deal with tariffs, whether that is about looking for new markets, re-engineering supply chains, those kinds of things. So they're kept busy. But I think overall the atmosphere is of watchfulness and calm at the moment amongst our customers.
Do you have seen any signs that it would affect their plannings about investments or making deals or acquisitions?
That's human nature, isn't it, Valerie? So, what we saw in February and March, and interestingly, so just after the inauguration and the first acts of the new U.S. administration, we saw people sitting and waiting, and of course, it's sitting and waiting that is one of the things that holds back growth. People will need to work out where they think things are going and then make their decisions. There is still, I think a lot of demand and interest out there. People want to do things, but they're waiting to see, how the situation might turn out before they act. So I think that might mean things are still a little bit slower in Q2 than we might have expected.
Yeah. How do you view the Nordic economies? In the presentation, you put the emphasis that compared to European Union average, Nordic countries have less exports compared to GDP. But I think EU is one of the highest export areas in the world. So I think we are still quite export-oriented countries in the end. So how do you see how much damage will Nordic economies take from a prolonged tariff war?
So Nordic economies are strong exporters, not just of goods though, and that's the important thing is we have relatively lower exposure to goods, but there is still strong trade in intellectual property and services and things like that. And our biggest trading partners are or the bulk of our export in goods either goes to other countries in the EU. Or to other parts of the world than the US. So I think that proves that we've been adept at finding markets for our goods. So yes, exports are a big part of what we do, but we've proved ourselves to be pretty good at finding markets.
If I recall correctly from our previous interview, Nordea kind of assumed that the confidence would come back and people would lend more when time progresses, because as you mentioned in the report, for example, in Finland, real incomes are already rising, people are saving, so they could take more debt as well. But if now confidence sinks, do you think that you were too optimistic at the beginning of the year?
I don't think I was too optimistic. We had we didn't have the sort of expectation of some of the things that the U.S. administration has put in place now. So I think none of us knew what to expect from Liberation Day, and it turned out to be more far-reaching than we thought. So we had good grounds for optimism. We saw rates coming down, interest rates coming down. We saw inflation coming down. And we started to see signs of consumer confidence returning. And what that would normally have done would be to increase consumption. And of course, the uncertainty that's been generated over the last 2 to 3 months means that I think probably customers will still pause and think a little bit more. But if we look at the data, one of the things we monitor quite carefully is credit card spending. In the last 2 weeks, credit card spending has been higher than the same 2 weeks last year.
Interesting data point.
Yeah.
You had the confidence to lower your management buffer by, if I recall correctly, 20 million euros. So now it's 397 million euros. So what gave you the confidence? How do you see the management buffer going forward?
So what gave us the confidence to make a small reduction this time was just a strengthening on the household side. We've seen higher house prices, And we've also seen through lower interest rates, then customers have better ability to cover their mortgages. So that was what drove it there. Those additional provisions, as you say, 397 million, that they are over and above what our models tell us that we need. And we've been pretty cautious about holding on to those. But we've also been pretty consistent that we'll release them if we think we should. And I wouldn't expect us to still have those, a couple of years from now.
So even in quite adverse scenario, you see that the management buffer will go down and credit losses, they won't. I think Frank used the word explode in the Q&A session.
Yeah, that's right. So, that's because of what we see from the strength and diversification of the Nordea loan portfolio. But we have to acknowledge also that in the same way that we've seen some twists and turns in the last couple of months that we didn't expect, is that things can turn out differently. And the way you deal with that is to be sort of financially strong, to have options, to have good products, to have good execution capability, and both Nordea and Nordea's customers, I think, have that. So,
indeed, yeah. Let's hope we have some positive twists in the next few months. Lastly, how would you sum up the present situation's effect to Nordea? First, we talk about the wealth management. I think it's obvious that if equities, for example, go down, then your management fees will follow a bit. On the other hand, many people have saw how Euribor rates have come down quite sharply in the last few weeks. So how do you see that impact to your net income margin?
So interest rates move around an awful lot these days in terms of expectations on interest rates. And some commentators think that we will see an additional rate cut this year, one more perhaps than expected, and that's what drives some of the moves in Euribor. And that may happen. It isn't going to have a significant impact on our 2025 net interest income, but let's see what effect that has on subsequent years. I still think that, though, as I said with our analyst call today, there are also things that push you in the other direction in terms of expectations on rates. So will there be an inflationary impact of the trade tensions and other things? How will therefore can that support rate cuts if we do see that inflation? So let's see. I'm relatively sanguine about certainly 2025 from an interest rate perspective. I'd much rather see some growth, some loan growth coming back in, which will come from confidence. Let's see how that develops. It also comes from what we've seen over the last few weeks is more difficult bond markets, and when bond markets get harder to access, then people turn to their banks. So that might be a bit of a short-term benefit for lending as well.
How would you quantify that impact? I think traditionally in Europe, bank lending has much bigger role than selling bond as compared to US, where companies usually sell bonds. So how big that impact would be, or is it too early to say?
I think it's too early to say. There are active bond markets for some of our Nordic businesses. Real estate companies have got a strong track record of using bond financing to support their businesses. So let's see how that develops. I think I make the point about sort of Nordea's diversification and resilience. I think we have a lot of tools in the toolbox and a good broad base of customers. So I think there's a lot we can do with that.
Thanks, Ian, for the interesting interview, and thanks for having me here.
My pleasure. It's good to see you again, Verneri, and also that you keep reminding me of the things I've promised you in the past. So.